Hi, how are you all? Okay, today we are going to discuss an overview of financial market from financial market and institution. It's the first module from financial market and institution. So let's move on to the financial market meaning. Financial market simply means it's a place where buying and selling of financial assets were taken. Financial assets are those kinds of assets like shares, debentures, bonds, commodities and currencies, etc. So they have a lot of meaning to you. It can be referred as those centers and arrangement which facilitate buying and selling of financial assets, clients and services. We can refer the financial market in different way. It's a center. Those centers and arrangement, not only centers, there are a lot of arrangement with the arrangement which facilitate, which helps buying and selling of financial assets. So, it's a center which make a lot of arrangement for helping the buying and selling of financial assets. And also, if they have any clients related with the financial assets, also handled by the financial market, and also provide a lot of services also. In other words, we can say it is a market in which people trade financial securities and derivative at lower transaction cost. You know, transaction cost is a cost it's a cost incurred for transferring a security from the company toward the investors. They have a lot of cost. But in case of financial market, this kinds of cost can be minimum. It's a market in which people trade the financial securities and a derivative at lower transaction cost. Some of the securities include stock, bonds and precious materials, etc. Okay, then next meaning. Financial market refers to the marketplace. It's a marketplace where the creation and also trading of financial assets, okay, they were held, the creation and also the trading of financial assets such as debentures, shares, bonds, derivative, currencies, etc. were taken place. Okay, the trading of these kinds of financial assets were taken on financial market. Okay, it plays a crucial role in the country's economy. Now we know that after 1991 LPG revolution, it bring a new era to the world. So for an institution, it's need more and more amount of money for to dealing with, for to invest. So some kinds of financial assets were sell through the financial market for to find out these kinds of money. So its place, financial market plays an important role in our economy. And also it's act like an intermediary between the savers and also investors. This will learn through a diagram. So please wait. The next, financial market provides a platform to the buyers and sellers to meet for trading assets as a price determined by demand and supply. In other words, we can see that it's just act like a platform to the buyers and sellers for meeting the trading assets at a price which is determined by the demand and supply. You know that when we dealing with the financial assets through financial markets, its price were determined through demand and supply. Okay, then next meaning, it may not have a physical location. Sometimes financial market need not necessary for a physical place. Okay. The exchange of assets between the parties can also take place over the internet or phones. This is called OTC, over the counter. Without the proper place, through electronically can deal the trading is called over the counter. We will learn it in later. What is financial market? Through this picture, I think you will get the meaning of financial market. Simply, financial market is a market in which people and entities, not only people, a lot of entities were there, like AOPs, BOIs, and companies, corporations, a lot of entities were there, can trade the financial securities and also not only securities and also the commodities and other fungible items. It has value at lower transaction cost at a price that reflects the demand and supply. Okay. In other words, we can see as a financial market as a market, they have a lot of pupils and also an entity can enter to it. They can dealing with financial securities and also commodities with low transaction cost and also the price, the assets price were determined by demand and supply. Okay. Then this is a financial market. Okay. Financial market may be financial institutions, banks, non-banking financial institutions, stock market, financial intermediary. Okay. Then lenders. Lenders, they invest their savings to the financial market. They have a lot of lenders, like business sometimes invest, or government may invest, or individuals also can invest in the financial market. Thus, deposits, this investment were moving toward the productive purposes. They can borrow different parties like business, government, individuals, etc. This is the structure of actually financial market. It's a simple pictorial representation. I think you got. Then types of financial market. They have different types of financial market. We can see all over the world. First one is over the counter market. Over the counter. There is no counter as needed to trade the financial assets like shares, debentures, bonds, etc. So, without any physical location, this financial assets trade can take place through over-the-counter market. It does not need a physical location. It's done through electronically. There is no broker is needed. Directly the two parties who want to sell, another party who want to buy the financial assets can take place easily without any kind of physical location. It's called OTC. When we are going to the procedure of OTC market, we can say that no listed companies were trading the security through this kinds of OTC. So we know there are a lot of famous stock exchanges like New York Stock Exchanges, Nasdaq or American stock exchanges. These listed securities were not traded in OTC market. Simply we can say that those companies, they were not listed yet, or they are small in size. They traded the security through OTC. Small firm also needs to mobilize investment through this market. Okay. The next, bond market. Bond is a security on which an investor loan money for defined period at a pre-established interest rate. When a bond is considered, you know that its profit to the investor is it will distribute it at discount and repurchase it at the price shown in the bond. Okay, then there is benefit. The benefit of the investor is between this discount rate and the price of the bond. Okay. Then normally the bonds are issued by municipalities, states, sovereigns of governments, etc. to meet the financial needs. Okay. Then money market. To meeting short-term needs, corporation depends on money market. Money market borrows money up to 1 year. Then we are meeting short-term needs. And also, one of the features of money market is liquidity. Liquidity, you know that it can be converted into cash within 1 year itself. So, for meeting such kind of short-term financial requirement, corporation can issue money market instrument like treasury bill, commercial papers, certificate of deposits, etc. We will discuss these kinds of instrument in later class. The next one, derivative market. With the opening of the economy to multinationals and the adoption of liberalized economic policy, the economy is driven more toward the free market economy. The complex nature of the financial structuring itself involves the utilization of multi-currency transaction. So, it exposes the clients, particularly corporate clients, to the various risks like exchange rate risk, interest rate risk, economic risk and political risk. So, there is need for to ensure or to reduce these kinds of risk. This can be possible through derivative market. It's a contract between two parties. Derivative market is a contract between two or more people based on an underlying assets. This underlying asset may be financial assets. It will be execute. The buying and selling of an underlying asset will execute at a predetermined price and at a predetermined date is called derivative market. Actually, we know that they have a lot of risk. For reducing or hedging these kinds of risk can be possible through derivative market. Okay. Then next is Forex market, or we can call it as foreign exchange market. It's a market in which participants can buy, sell, exchange and speculate on currencies. Exchange itself making commodity for this kind of market. So it's more liquid because you know that it's dealing with currency, so it's more liquid than other assets. And you know that the currency market handles more than 5 trillion dealings transaction daily, which is more than the future and equity market combined. Okay, then it's a main kind of financial market. And also it's a decentralized. Decentralized means there is no place for to dealing this kinds of transactions needed. These kinds of transactions were taken through global networks, through computers, and it made up with banks, commercial companies, central bank, management firms, hedging firms, and retail forex brokers and investors. That's it. So please go through these lectures and write down the important notes. Thank you. Have a good day ahead.